All right. So, as we all know, this is a coaching program. And before we start showing you the markets, we want to imagine that everybody here is a newbie and they don't know about candlesticks. So it's important that we talk about candlestick anatomy. But you understand the passion we have for Royal Q is because we want people. Royal Q depends on three things. So there are three components to Royal Q. The number one component is you, the user. The second component is the Royal Q technology. And the third component is the market. All right. These are three key components. Of course, you have your internet and all that, but your device and all that. But the key components are you, the app, and the market. Now, you are the most important component in Royal Q. You have to understand the bot and the market. Okay. You have to understand what a candlestick is. So this presentation is just to help you have an idea for newbies what the anatomy of the candlestick is. So this is a bullish candlestick. For every candlestick, there's an open price, there's a close price, there's a wick, otherwise called a shadow. All right. There's a low, there's a high. Now, the high is also called the highest price, that price made within that interval. The low is also called the lowest price. Okay. So this shadow is also called a wick. The highest price is also called, the upper wick is also called upper shadow, So you will hear wick more from my mouth because wick sounds easier to pronounce than shadow. Just one sound, wick, and we're done. So, but you need to understand that a candlestick has an opening price. And the way a candlestick opening price is positioned and the close price is different in a bullish candlestick and a bearish candlestick. So here's a bullish candlestick. So let's just imagine that this is a 15-minute time frame. That means everything on this candlestick happened within 15 minutes. If it's on the 5-minute time frame, it means everything on this candlestick happened within 5 minutes. If it's on the 1-hour time frame, it means everything on this candlestick happened within 1 hour. All right. So if you understand this, then every candle you see, you'll be able to appreciate it. So the first thing here is that there's an open price. For the bullish candlestick, the open price is always lower than the close price. Open price is the price when that time interval opened, that new time interval opened. So when that new 15-minute candle opened or that new 1-hour candle opened, depending on the time frame you're on. So in this candlestick, the opening price was here. Then what happened after the opening price? You see, the price first went low, as if it was going down. The market will always try to trick you, all right? Then when the market went low, the buyers started coming in. The sellers pulled down first, then the buyers started coming in. When the buyers started coming in, they pulled it back up to the open price, pushed it beyond the open price, it turned green, and the price became green. The candle went high, went super high to this point. Then the sellers came in, pushed the price back down, okay? The sellers pushed the price back down until the price closed here. So this is the closing price. But what you need to know, the candle is green, which means it's bullish. The opening price is lower than the closing price. That means the price closed higher than when it opened. So what is the real body or the body of the candle? The body of the candle is from the closing price, between the closing price and the open, that tick bar. So when you see a candlestick going further after today, you need to understand the anatomy of the candle. If it's a red candle, we're going to show you what a red candle looks like, all right? So in the course of this training, when I tell you wicks, or in the support and resistance training, which I have already circulated for you to watch, when I tell you wick refers to right here, this lower shadow, all right? And the upper shadow. That is upper wick and lower wick. So I need you to understand this, that the wick refers to the part of the price outside the body of the candle, but which price actually went extended into during that time interval. Now, for the bearish candle, the opening price is higher than the closing price, which means sellers prevailed. So look at this candle, for example. The price opened right here. Then the bulls started buying. So when you hear bulls, it means buyers. When you see the market is bullish, it means buyers are, prices going higher. All right. So when the market opened, the price started going up. It went up to this point, and the sellers took over. The bears. So when you hear bears, the bears refers to the sellers. All right. So when you see our signals, you see bull. You can either see bull buy or bear sell. All right. So this is very, very important. Please, if you come into a meeting room, mute yourself. All right. So this is what you need to know. The price opened here, went up like the bulls wanted to take over, but then the bears took over and the price came back down to the opening price and went lower. Color changed to red. Okay. And it sold. The bears took over till it formed the lower price, this lowest price. Then the bulls came in and pushed it up a little bit. So that counter move by the opposing force is what causes a wick at the both ends. All right. So the wicks are called the upper shadow and lower shadow, upper wick and lower wick. This is the body of the candle, opening price and closing price. All right. So I just put these two pictures side by side so you know what we call a wick is actually also called the shadow, the body of the candle. But remember, open price is above the close price for the bears. And this simply means that candlestick open, but the market went down and closed at a lower price. So this is a fundamental aspect of trading, and I want you to have it in mind before the price action course, which will come much later during this training for goodbye to floating loss. All right, but it's a very important and powerful concept for you to comprehend.